mighty fine. It was a very interesting Thursday, shall we say, in the marketplace.
Yeah, some crazy action there. And I'm going to kind of point out something today that might have alerted you to something like this happening, and why it's important to keep your eye on your alerts and also the sectors. We've been talking a lot about these sector watch list. So anyway, I'm gonna kind of talk about that a little bit. Before we do, let's move on to our disclaimer and get this stuff out of the way before we start. Guys, just remember, we're going to have a lot of fun in here. We're going to talk about some interesting stuff, but we are content providers, okay? This is for educational purposes only. Anything you see in here should not be construed as investment advice. If that's what you're seeking, please look for a broker or an RIA. But let's move on and talk first about our 5-star support, education, and training here at Southwest. Where in the heck did that come from? At Trade Ideas. We really pride ourselves on this, guys, and I'm going to spend a little bit of time on this because I know we have a lot of people that took the test drive and are now subscribing, and I just want you to know all the resources that are available to you as you come on board with us here at Trade Ideas. It all starts in the trading room that's moderated by Barry Anderson. He does an incredible job in there. You get to look over his shoulder while he navigates the market using our software. And he also calls out his trades in real time, just a little added bonus. And if that wasn't enough, you have about 500 traders by our CEO, Dan Merkin, and or CTO, I should say, Brad Williams. Some really good stuff in there. They answer a lot of your questions in there, and we'll do the same thing in here. And also our Friday support session, guys. We do this every Friday now, and it is so valuable to those people who are just onboarding here at Trade Ideas. We open it up for 3 hours on Friday, 11 a.m. to 2 p.m. Just a place where you can come and ask any question you want, and you can see it demonstrated on our desktop while we discuss it with you. It's just a great hangout, and this is also for those who are still kicking the tires. So if you can't get enough in the webinars and you still want to see more, come to that Friday support session. Did I miss how to do that? Okay, yes. So one-on-one training. This is 1 hour with either me, Jamie, or Steve. It is free when you subscribe to Trade Ideas. It's normally a $99 value. You have 3 guys here that have been using the software for 14 years since its inception. We know it very well. And not only that, but we're all professional traders and been doing it for a very long time. So it's a great 1 hour to spend. It's free when you subscribe to Trade Ideas. So any of you guys took the test drive and you're still kind of pondering about what you should do, just remember this is a $99 value, and when you sign up, you get it for free. One other thing real quickly is our Brokerage Plus interactive broker users. These are people who have their strategies developed. They put a lot of time and effort. If you want to take that strategy and automate it to where you can go play golf if you'd like, and trades would be executed by our robot, you can do that. This is for Adult Swim only, okay? This is not for newbies. So if you want more information about that, you can find it there at tradeideas.com/beta. It's still in the beta phase, so as long as you are a premium member, it will be free and you'll be grandfathered in. All right, let's look at our agenda for today. We're going to talk about market recap, and we're going to be diving in that here in just a second, and I want to talk a little bit why you should have your eye on the sectors. You know, it's not something you have to sit here and stare at all the time, but you need to be cognitive of what's going on in these sectors in the environment. and I'm going to kind of give you a heads up today of what happened in the marketplace. Then we're going to talk about a common aviary problem. The golden goose versus the canary in the coal mine. This is going to be an interesting little segment, guys, where, you know what, I'm just not going to go any further. I'm going to leave it at that. We'll dive into it here shortly, but I'll at least kind of get your interest up in it. Talk a little bit about Holly recap, which is also going to tie into our canary in the coal mine segment. Last week, I introduced you to the option scan. I kind of added a few more columns, tweaked it a little bit, so I will also share that one out. We're going to go through that and show you how you can really find opportunity during the earnings season, but with this option scan and what to look for. And I really want to open up the floor to questions today because we are just finishing our test drive. I know a lot of you still have a lot of questions, so if you do, we'll get to them as soon as we can. One of us will always be in there answering questions in the panel there, but I'd like to, as much as I can, not only do that, but demonstrate it for you using our desktop sharing application. All right, so let's back out right now and let's pull up the market here and let's take a look at the overall markets. And we always start with the spiders. Probably the most followed by, well, it is the most followed benchmark. You know, this is what all the hedge funds are compared against. All the mutual funds is because it's a broad variety of stocks. You got basically 500 of the top stocks on the exchanges. So interesting day today. I mean, in the long-term picture, you can say what you want about the sell-off we had during midday. Yes, it was kind of ugly. Yes, there was some volume behind it. Yes, it took out like 4, 5, 6-day lows in some cases, like the Qs. But the big picture, we're still grinding higher. And you know, some will argue, the bears will argue, it was like, yeah, but the moves higher are on less volume. It doesn't matter because, like we always say in here, price is the only thing that pays. And right now, price is paying to the upside. It's a bullish tape. And even as we try to sell off really hard today, we bounce back and put in a kind of a hammer there in the spiders. Interesting, as me and Jamie were prepping, I didn't look at this during the day, but the diamonds, I don't look at this often because once again, it's only a few stocks compared to the number of stocks you have in the other averages. But nonetheless, look at that. They fought back and closed pretty much on highs in the diamonds. And I'm sure that was probably due to Boeing or something.
Andy, we were all joking around today, and of course, some people were saying this on Twitter a lot. And it's like, okay, CNBC is just gonna, you know, blandly report. And the market today, the Dow was up X amount.
Yeah.
They weren't seeing the thing in real time like we were, but I just thought that was pretty humorous.
It is humorous, and yeah, the Dow, it's so antiquated, and but yet, you know, it's one of the major indexes. So, but you're right, Jamie. It is funny. If people come home from work and they just sit back, Dow's up again today. They had no idea what happened during midday when. We'll just take a look at the Qs. You know, nasty drawdown there in the Qs. Took out 1, 2, 3, 4, 5, 6 days of 6 highs in just one big swoon. Probably, you know, what, hour swoon or something like that. We'll look at it more in depth. As a matter of fact, I kind of want to go into this right now because I kind of want to show something that I talk about red flags. You know, I'm always kind of looking for red flags, especially when you get this overbought. You know, what may tip you off, like the market may be getting tired. Well, one could argue if you look at the spiders over the last few days, you know, just a doji there, and this is a gap up with a red body, another red body, and then today a red body, but it did bounce back well off its lows. But could be signs of a tiring market after another decent run this month. So let's take a look at what I wanted to show you today is, if you look at the sector analysis, and if you could have noticed this real early, the IYT. The IYT is usually a major component of bull runs. And as a matter of fact, it can be You know, a lot of people think it's the leader. You know, you want to see your transportations moving higher as the bull market, you know, continues to move higher. But if you noticed it lately, the last couple of weeks, the IYT, look at this. It came into the day, and remember the spiders, how they were pretty much all-time highs, Dow all-time highs. But look at the spiders here. I mean, the IYT, the transportation sector. And not only that, look at the opening in it today. It opened up with a little gap down. This is when everything else was gapping up huge due to Facebook. You know, Facebook had great earnings. Oh, great. Let's just gap everything up. But look at the IYT, open and just immediately sold off. Now I'm sure there's probably some stuff behind this, some earnings. I didn't dive into it, but nonetheless, just on the broad perspective, you have to understand that this is a major component and a major sector, and rarely do you see a continuation in a bull market run with if this is not participating. So I would you know, keep an eye on it, because we're basically went to a 2-month low in the IYT, and not much of a bounce there in this sector at all. So that was kind of what started the whole move, and then it was just kind of a pile on. You know, it was very, you know, very interesting. You had Facebook that had credible numbers, and then yet when that happened and people started noticing, and all of a sudden, boom, the Qs just fell out of bed. So something kind of keep an eye on your sectors. Know the big ones that are very important: transportation, financials. Oil, not so much. You know, it's because a lot of people will argue oil doesn't, actually, if oil is going down, it's better for the economy, you know, and things like that. But if you see some major sectors, you know, like the financials or the transportation, healthcare maybe, but just be aware if you see something falling out of bed and you're long the market, you might want to take some profits. But Jamie, do you have anything else to add? I mean, they're still intact. You know, my book. I mean, that's kind of an ugly day, but gosh, we've seen this before, and a few days later, we're back at all-time highs.
It does not surprise me at all, considering the market that we're in. You know, for a while there, we had some nice calm days that felt kind of like summer days, but we all know already, summer's not like it used to be, right? Mm-hmm. There's too much stuff pushing things around, too much macro. It's just the market is very stirred up, and we just happen to be at all-time highs. So to see this late day sell-off, or midday, whatever you want to call it, not a big surprise. Now, if we would have just crushed right through that, you know, what we can, you know, just looking at the SPY on the daily again, if we would have went down to those lower extremes at the top of, you know, what used to be the resistance, with volume, yeah, that would have been maybe some reason to be all concerned. But in my opinion, it's just the normal fluctuations at the top, maybe a little bit bigger than most people thought today, because, you know, when before the day unfolded, we're all looking at the chart and go, hey, if we do get some selling, you know, we might hit down to 246 or so. But guess what? Just like they always do, they stretch it out just a little bit further and really get that level to where it's like, oh, they hit my stops or whatever. That's
exactly.
Hey, welcome to the market. That's what happens all the time. It happened on the overall market today, but this also happens in individual trades a lot as well. You know, it's the same old song and dance, just, you know, one stock as opposed to the indice here. Now, while we're on that topic, when we go into what did Holly do today, we'll talk about the compare count readings first, which will tie in nicely to what you were just showing everybody, and, you know, the downside move that we did have today, and kind of how to read in between the lines.
Yep. Yeah. Very good stuff. You're right, Jamie. I mean, it in the big picture, it was an ugly, nasty move during midday, but once again, the bulls kind of took charge at the end there, and especially in the spiders and the diamonds, and took it back to where it's pretty respectable. So,
right.
All right, I'm going to go back to my board here, and let me present again, because I want to talk to you more about this common aviary problem that we see. And I want to preface it by saying, if you've been watching Holly over the last couple of 2 or 3 days, she has. I mean, it's been tough for her. But let's not discount the fact that over the last year and a half plus, Holly has pretty much been decimating the market. She has been outperforming the market by a wide range. And this is artificial intelligence at its best. And when you see, Holly struggling like she has the last few days, this is when you as a trader say, wow, here's a very sophisticated piece of equipment here that comes to the market each day with casino stacked odds, and she's having a hard time, making a profit. This could be a blessing to you, all right, because so many people out there are looking for the golden goose, when in actuality, I'm going to show you today, we're going to look at an example, and I'm sure Jamie's going to have a lot to share here, where you can look at Holly as a canary in the coal mine. For anybody who's not familiar with that little cliche there, it's basically, what coal miners used to do. They would take a canary down with them and, hook it up on the wall. And if, if there were any deadly fumes in the mine, the canary would obviously die before they would. So they knew to get out. So Holly, when you see Holly struggling, and I kind of we'll get in. I'll come back to that in a minute. I had to show my little pictures here. I forgot to do that. My little picture here of a golden goose versus the canary in the coal mine.
Exactly.
Yeah. Well, yeah. And I think this paints a good picture. And what I'm talking about here, guys, is, trust me, because I've been a trader for almost 20 years, and so is Jamie, and we know what it's like, and it's your job, and you feel like if you're sitting on your hands, you're not working and you're making money. That's the common misperception, which is really not the case at all. Jesse Livermore, he talks about all the millions that he was made sitting on his hand and actually not trading. Yeah, and you have to learn to do that. And we've been talking about helping traders slow things down. Too many traders come in here, you're anxious. Trading can be very fun, but you really should take the approach that it's a job and it's not supposed to be fun. Because, going to the casino and sitting down in blackjack, that's fun. Okay, this is a job. Okay, it's not gambling. And when you come to the market and you recklessly, jump in and out trades all day, you're racking up commissions. I've seen so many traders come and go that were very, very good traders. They made profits on a direct P&L spreadsheet, but when you factor in the commissions, that they kill you. So that's why we're trying to get you, to slow things down. And when you see, Holly struggling, and Risk On actually came back today and finished up okay, but for the most part, let's face it, she was in the risk off mode, and it was kind of a risk off day if you look at the market, very sloppy back and forth. When you see her struggling like that, this is when you got to, you really have to understand that, hey, this is a signal that I should probably be sitting back and not forcing any trades. Is there still opportunity in the marketplace? Sure. Me and Jamie's going to show you where there's market opportunity, but conditions like this, when you kind of reach potentially a topping area here and you get sloppy back and forth action, opportunity can be hard to find. And if you can't find that opportunity, it's far best to sit on your hands than to force trades and guess. Jamie, I'm sure you have some great words of wisdom, to add to this, and just feel free at any time to jump in here. I don't want to steal the show, but
you've kind of framed it up pretty nice already, Andy. So if you want to pass the baton over here,
okay,
I'll take it and continue a little bit deeper.
Okay, great. Go right ahead. Yeah.
Let me find my little panel here. It always likes to disappear on me. Where did you go? There you are. All right. Okay, just let me know when you have eyes on there, Andy, and I believe everything should be formatted. All right.
I got it.
All right, ladies and gentlemen, welcome to my desktop. So let's talk about, of course, obviously I've still got the spies up here. We can see the nice little day. Everybody thought maybe if we got some selling, you know, we'd kind of come down to here. And of course, just like we see on a lot of stock trades, wick, just barely get you out and then snap back up. All right. So yeah, there was a little volatility in the marketplace today. But as Andy was saying earlier, if you knew where to look, there was still plenty of game to be had. Now, we're not going to spend too much time on Holly, but there are some juicy nuggets in here to be taken away from. All right, because what is Holly? She's the trader that trades with statistical perfection, but that does not ensure that every day is going to be a winner. So, you know, those of you who are regular attendees, you know what's been happening as of late. For those of you who are new, I was going to make a slide for this, but I just went and grabbed the data. But basically, out of the past 11 trading days, with today and yesterday, Holly's been up 9 out of 11 days. So just kind of want to frame it up a little bit more for you new people that might be seeing this for the first time. But it's a good thing today to go, look, she was down, because anybody that ever says they have a system that never loses, well, just turn and run very fast, because even though we play with statistical probability on our side, there's real world, you know, things like execution and did you get the trade and all these different factors that come into play. But if we know for the most part moving forward, if we apply the statistics in the long term, we're going to be in pretty good shape, because we're going to be, you know, having these hand-picked, or not hand-picked, but hand-delivered, I should say, from Holly, and we know what the statistical probability is of anything that is generated from any of these strategies. Just that in and of itself is a huge advantage over the person that's trying to trade the markets and not incorporating statistical probability into their routine. It's just that simple. Now, case in point, that's why casinos are in business for good and are spreading like wildfire. As new states continue to, all of a sudden, you don't have to go to Vegas. Why do they keep opening them up? Because they make money, and they just use statistical models. You know, a lot of people might think, hey, when I run up to the roulette table, for some reason, roulette's one of the, you know, the big popular games. It's fun, you know, gather a crowd, the guy sits there and spins the wheel, everybody's waiting on pins and needles while the little ball bounces and finally locks into a number. People are like, oh, well, all I have to do is bet on black or red, or, you know, odd or even, I got 50-50 shot. No, you don't. You got slightly less than a 50% chance, because there's double zero along with zero, and that's what tilts the odds in the casino's favor. That's why they have the game. If they didn't have the double zero, it would disappear from all casinos across the planet pretty quick. So keeping that in mind when we're being delivered, you know, these types of statistics, most of the time they've been working pretty well. Now, Holly had a losing day today, both on risk off and risk on, which is an anomaly in and of itself. Past 11 days, 9 winning days, today and yesterday, what we would call small losing days, which is healthy for any system. So we can see right here, underperform, slightly underperform on this little guy right here that had 3. And I can see some questions rolling in over there, so don't worry, I'm not ignoring them. I'm going to address them here in a little bit. Now, it just seemed to be the case that no matter what Holly was trying on the long side, it really wasn't finding any traction today. So just want to, you know, get everybody to look here. Risk off started out a little bit green today, and then red. Same thing with the risk on, a little bit of green and a little bit of red. Usually this chart is inverted. Holly will be green, red for a little bit and then catch some traction to the upside. So Holly today was that canary in the coal mine. When we see this model struggling, it tells us something. Now, in conjunction with this, okay, hopefully let me make this a little bit bigger, but hopefully everybody can see these compare count windows. And by the way, I tweet these out every morning about right at 20 minutes into the open. Some of you know what these things are already. For maybe some new people out there, what what these windows are doing is they're looking at the big cap stocks. We can see the breakdown in the market cap, 4 billion and higher, 5.4 billion and higher. Companies between 2 and 4 billion market cap, and then anything below 2 billion. Now, across the board today, after the first 20 minutes, what do we see? 64% red in the 2 to 4, 59 in the sub 2s, and anytime we get up to this 55% level, that's when I really start paying attention, below, between 50 and 54. But anytime we start getting up to these levels on the big caps, it merits some attention, all right? So 20 minutes in, I see these readings, and I'm thinking to myself, okay, well, interesting. We'll see what happens. So that's the first thing, we could call it keep your powder dry signal, or be very, very selective signal. You could call them both, really. So that was the first interesting piece of data that was generated if you're watching these windows. Now, then, as the day progresses, we see Holly unable to get any traction to the green side. So we got our compare counts, but let's keep in mind, here we are looking at the 5-minute candlesticks on the SPY. 5, 10, 15, 20. We're getting those readings right about here, right? 5, 10, 15, 20 minutes in. So I'm thinking to myself, well, we gapped up. Wouldn't be crazy for a gap to be filled. It happens all the time on regular stocks. And then, we kind of do this and then whoosh, back to the top. So I remember sitting there going, well, this must have been that opening selling, got cleaned up. But see, what we're actually tracking with these compare count windows is big institutional type volume in the big cap stocks. It's almost like we're taking the pulse in the beginning, because obviously there was a lot of institutional selling today. Now, this catalyst, was it Amazon's earnings leaked out, or was it just selling that had to be done? Because if we're getting these readings, then we come up here, what those readings were telling us is in this opening 20 minutes, there was a lot more institutional selling in the big caps than what is typically normal. So higher selling velocity in that time period for those big cap stocks. And then of course we bounced, went sideways, and then guess what? Seller gets X amount of that big institutional order done in this period. They can't get it all done, but a lot of stuff gets done. You would have been amazed at the handful of stocks this morning that traded over 1 million shares in the opening 5 minutes. It was a nice little handful. 1 million shares in the first 5 minutes. So, that one 5-minute candle, boom, it's already traded 1 million shares. So that was another odd statistic that I noticed. But obviously the seller probably got a lot of selling done up in here, and then the sellers outweighed the buyers. You trip some wires, everybody piles in, and this is what we had, and it happened pretty quick. Not a lot of, it tried to catch its breath a few times. And of course, many things that aren't even tied to the SPY or SPY components, they're going to get drugged down as well. So weird readings on the compare count, or high sell volume readings on the compare count, couple that with Holly not getting any traction. So that helps us temper what we should do. Either sit on hands and only pick the chart patterns that are the cherriest of the cherries, right? And of course, if we look at her blotter today, there's really not a whole lot to go over here, other than the fact that, she didn't get crushed on anything. 75 cents was the worst that she had here. Of course, when we see all these plug outs, we can go back and attempt some trade arounds. If it gets back through that entry point, you get alerted. But if it doesn't, it's a non-event, so you don't waste your time. I guess one of the most noticeable ones was, after a lot of the selling had already gotten done, we're looking here at the 1205 bar. So let's just go reference the 1205 bar for the SPY, which is right here. So we had already come off the hairy little bottom there, and we were about right here at the same time that Kayla was issued from the power hour long. And this is also going to tie in, I saw somebody asking a question, why didn't Holly trigger any shorts today? Well, she came loaded with some short strategies, but once again, these filter complements not only on the short strategies, but all of these guys. I mean, they're very complex. You could have, let's see, how many filters per row? Some of these configurations have 30, 40 filter settings, which are working in the all or none capacity attached with an alert or trigger. So they're very specific traps, and only things that fit into those traps are going to get triggered. And due to the fact that we're in a raging bull market, just because the market sells off does not mean Holly is going to go, oh, the market's selling off, I better get short. That's not the way this system works, right? These strategies are being optimized and back tested by the AI that we invented to do that work. But, you know, there is no truly intelligent AI, and that's, I guess, the reference that the question might have been, is the traps are already set before the market opens. All the work's already been done. You've probably heard that before from just people who are individual traders. All my work's done the night before. All I have to do is react, right? Well, it's the same thing with Holly. All of these strategies are completely done before the market opens. There's no changing them according to what's happening now, if that makes any sense. Now, when the market rolls, finally, whenever that day might be, it might be in a month, it might be in 6 months, who knows? We can't predict that type of activity. We can try, we probably wouldn't be very successful at it. But when the market finally does start to go down and we officially become in a bear market, well, as the system soaks up that new data, then more short strategies will present themselves, and basically we'll see an exact reversal of the type of activity that we're seeing here now. But for all practical reasons, we're still in a big bull market, so long strategies and long trades are going to be the majority of those trades. So I hope that resonates. You know, seeing the compare count windows and then Holly struggling, but let's talk about the Kayla trade because it fits the classic example of the trade around. So, I mean, wham, as soon as you saw this was on the blotter, it was almost like she was stopped out. It happened pretty quick. But then what do? If we see Holly down or stopped out, we just come back up here and we right click and set a price alert for that same level. So 1950, we would have been triggered again. Okay, first time, no good. We see this a lot on Holly trades. Most of the time they don't get stopped out though. Most of the time, matter of fact, where's that one? Not that one. What was the insurance company, Andy? The bank, right here, okay? Most of the times, you know, these are what the Holly trades look like. We get a buy signal, and then they'll either typically go up, or they'll retrace and kind of hover around the signal, or they might pass back and forth through it, you know, within a 5 or 10 cent range. In the Kayla, it's still doing that. It's just a little bit more stretched out, right? So we got the initial whoosh. Of course, you know, when we saw that, you know, this is a relatively new issue, interestingly enough. And of course,
and they are going to be volatile for the most part. Yeah.
So we got a new issue. Of course, we're playing the look to the left game. Oh, it just butts up right to the bottom of that candle there. Magic? No, just looking to the left. It seems weird seeing, you know, a daily chart like this, but the game is the same. The candles are just fatter. So we see, if I look over here, I'm like, yeah, okay, well, you know, timing was just a little bit off. Let me know when it gets back above there. You would have got 2, 3, 4, 5. It went back and forth 6 more times, and then it finally caught and went. So anytime you see Holly in a red position, you can attempt to capitalize off of that. You know, she is the trader calling out trades. Can't tell you how many times, Andy, I'm sure you can confirm this as well as anybody like Steve or Dan or Brad, but there was always a guy, or you were always getting a little piece of information from somebody in the trading office, whether it was just somebody going, hey, I just got long this, you can get it a penny more expensive, I'd recommend it, or the guy that's short and the thing won't go down and there was only one market maker holding that bid up and he won't leave and he's just sucking up share after share, and you know that when the tide turns, those offers are going to go ripping out of there so fast, you want to be able to see them, so you better go ahead and start getting them now, right? Well, Holly's the same way. I just got stopped out of this trade, and now it's right back up to where I bought it. That's what Holly was telling you. I just got stopped out. Now it's right back up there. Now you might want to take a try at it because it's buttoned up against that candle from the 21st, right? So, you know, listen to Holly, listen to what she's telling you. Now, I know if you're not used to it, well, it might be a little hard, but we're telling you, we're the translators between you and Holly. This is how we do it, right? So not a lot of examples of the other thing that we like because we have trade arounds and going risk on as opposed to risk off. So this was a trade around, and then, you know, can't really call it, you know, we could call it a second entry or trade around. A lot of the times we'll see risk off be posited by 10 cents, but risk on posited by 70 cents. So the goal is always to capture a little bit of that spread, but just wasn't the day for that. So all in all, to see Holly struggle to get those compare count readings, I was very tempered on the day. And there were plenty of things that continued to go up today, if you knew where to look. For those of you who watch the Turbo Up family, then you might have been aware that ADP was triggered today, right about here. And somewhere in this area here, I've got it marked up on Twitter somewhere, but ADP just didn't care about all the negative stuff or the selling. See, no matter what's going on, if you know where to look and you know the patterns to look for, there are things that work. This was about as painless of a trade as you could have hoped for today. GGG, another little break from these candle bodies here. And of course, if you're a purist, play by the rules 100%, and we're talking about the wick here. But whether you took it here or here, nice upside potential all day and just a nice, you know, hugging of that line. I mean, if you're an in and out person, there's opportunity all over the place on this highly liquid stock. But you know, it just goes to show you there's always going to be a few stocks gravitating to the upside, even in a down market. So if you played your cards right today, or more importantly, now that you're getting exposed to this type of information and how to process it, in the future, whether it's a slow day or a busy day, or whether the storm comes out of nowhere, like today, and that, you know, Andy, I don't want to take up all the time here, but you know, I was telling Andy, I'm like, okay, let's use the hunting analogy one more time. We've done all our work, we've got all of our gear, we got out to the site nice and early, there's no other hunters, and man, we can see game all over the place. We sit there, we start waiting for our animals, we bag a couple, and the next thing you know, this storm moves in out of nowhere. I mean, the wind is howling, it's raining, you can't even see in front of your face. What are you gonna do? Well, you're gonna pack up and go home and try again the next day. You're not gonna stand out there and go, dang it, Andy, I need one more. I can't see, but I'm just gonna aimlessly fire into the storm. Maybe I'll hit something. No person in their right mind would do that. Now, today the storm came out of nowhere. So if you weren't really geared up for it, you just go, okay, well, I don't know what's happening here, but I'm just gonna wait it out, keep my powder dry, live to fight another day.
Oh, good stuff, Jamie.
And I believe that's all I got for today, Andy.
Well, no, yeah, you had some good stuff, and I'm going to actually add to it as you. Well, actually, I can even start before you start passing it this way.
Yeah, go ahead. I got the button.
Okay. I think. Have you passed it? I wasn't sure if you.
Oh, there. Yes. Okay, there we go.
There we go. All righty.
He's hiding.
Let me get rid of this. And we've given you examples today of, you know, how you can maybe glean from the software of when you might want to sit on your hands. The software can be so informative. It's like your buddy. I thought of a good analogy would be like if you watched Jordan Spieth this past weekend, you know, he won his third major, the British Open. But if you ever watched him and how him and his caddy are a team, it's incredible. He depends so much on that caddy. The caddy will know, you know, the exact wind direction, the exact yardage to the green, the slope of the green when you get up there. And not only that, the caddy is great in calming his nerves and keeping his anger under control. And anyway, I kind of want you to think of the AI, the artificial intelligence, as kind of your caddy. I mean, because not only is it going to show you some great trades, and I guess I can speak for the whole software, not just AI, but it can be an incredible caddy for you. Okay, it can show you which way the direction of the wind is blowing. You know what's happening, if there's opportunity out there in the marketplace, if maybe you shouldn't be trading and sitting on your hands. So I just think more people would benefit from really kind of slowing things down and taking a broader perspective and looking at the big picture versus just zooming in on one alert and just trying to grab some momentum real quick and ride it for 20 cents. But anyway, so think of it. Think of you being Jordan Spieth. I mean, that's the advantage a lot of these pros have over your Sunday golfer. You guys like me and Jamie to go out there. Of course, we're nowhere near the ability that they have, but even so, they have an extra advantage because they have that caddy to help them with their emotions, with their game, showing them where the opportunity can be and when to hold back and not pull out the driver, maybe pull out a 3-iron instead. But that said, let me close on giving you guys, I kind of tweaked my version of my, what is it, the option scan. I call it option scan 2 earnings. This is my earnings edition. And by earnings edition, all I mean is I went in here, and just to give everybody, if you weren't here last week, I'll just go ahead and show you the configuration of this. It's very simple. It'll come up for me here. Basically, you're just looking for option volume over 150% of normal for it to appear on this top list. Price has to be over $5. Average daily volume in the 10-day time frame has to be 300,000. And relative volume, I tweak that up too, just so I don't get these anomaly option things coming in. But anyway, earnings date, I don't want to see anything unless it's reported earnings 2 days ago or sooner and had earnings this morning. And that's all I did to it, and this is how you can really find, and I did add some columns in here. Position and range, I wanted to do a position in the year range, so you can take a quick look sometimes and position, and you can add as many columns as you want to. A position in the 20-day range might not be a bad idea. But I want to give you an idea of when you see your scan in the morning, just a quick glance, and you can see, of course, this is at the close of the day, but you can see where a stock was in its intraday range. You can look right here quickly and see where it is in its yearly range. So maybe if you're mostly a long-sided guy and you see JCI, coming through on huge option volume, but you look down here on the yearly range and say, well, that's like near its 52-week low. Something's got to really be happening good there. That doesn't mean it can't be a good long, but it's just a matter of preference. But I wanted to show you, just by going back real quickly here and just looking at I'm just going to kind of go over the last week here of, I'm just going to go back to Monday. I'm going to go back to Monday here and go to time frame. The way you go back in history on a top list, you go to use historical date. You plug in any time you want. I want to plug in 9 p.m. my time for Monday morning. That's 30 minutes after the market's open. I want the stock to have traded for at least 30 minutes and just kind of take a look to see if there's any opportunity in here. Now, I do have this sorted. So this was 9 o'clock on 7/24. So it was Monday morning, so obviously you didn't have any trades over the weekend, but Monday morning you did have a few earnings come out. Let's take a look at the pets. I can tell by looking at this position in range, it's kind of in the middle of its range today, but look at the position in year range. So that tells me right there, this thing is breaking out on huge option volume just by looking at this simple scan. Pull up pets. This was at $44.67, $44.67, and look at the move you had after 9. This is not something you had to jump on right in the first few minutes of the day to get it. No, you could have bought it 30 minutes after the open. And I wanted to give you ideas of how to slow things down and maybe even look for multi-day moves on these things. Let's go to the next morning. Use historical date again. All we have to do, since we have 9 in there, is let's change the date and go to Tuesday. FCX. So it went off at 14.15. I'm not even sure how some of these traded today. I was looking. So there you go. You had a stock that went off at 9 o'clock around 14.15, pretty much right here. Got as high as about 15.25, so a nice move there. But once again, option volume, position in year range. Now this one is more, you know, about 60%. So this is one I would want to scroll back and see what I see here on the picture. And you can see for some resistance there at 15, going back right here. And remember, all your whole numbers are going to be some psychological resistance anyway. That's where you can see where it went up to it. Now, does this one still stand a chance of moving higher out of this range? Yeah, it's right now, it's just running into this resistance at the 15 number and pulling back. This can still be a multi-day, multi-week, whatever you want to consider it, because you had earnings, you had huge option volume. Most of your option players are not looking to buy options and get out, you know, for a 15 or 20 cent move. Moving right along here, let's go to Wednesday. Uh-oh, I messed up and did the real time. Hold on. I got to set everything up again. 9 a.m. And let's take a look at Wednesday. I said we have some questions coming in here, so I'll just make this the last one. Let's see. Let's look at the top one there, Boeing. On Wednesday at 2:29. And it went out today at basically 241. So went off right here. I'll zoom in for you here in just a second. You got a horizontal line right there. You got basically an all-time high, 52, every kind of high you can think about it, huge volume. What I'm talking about, guys, is what I'm getting. This can be very, very powerful to slow things down and look for multi-day moves. I mean, just right there alone, you got a $12 move. I mean, I know not everybody can afford to go out and buy 1,000 shares of Boeing and sit on it, but who says you have to buy that much? You can buy 25, you can buy 50 shares. But anyway, I just kind of wanted to show you guys this could be very effective during earnings season, and I will drop that into the chat window. So if you go to your GoToWebinar dashboard, control panel, whatever you want to call it, you'll find a little segment called chat, and I will type in there, so maybe you'll see it, and I'm gonna call it option scan, and then I'm going to save and share this with you guys. Copy all. And I'm sorry, Jamie, while I'm doing this, is there any questions that you feel like need to be answered out loud?
I think we are pretty much caught up here. Just taking another gander. Let's see. Yeah, we had a question come in about, hey, are we going to start tracking the cyber currencies, Bitcoin and Ether? And, you know, we've tossed that idea around for years, but the market just wasn't mature enough. And now that it's starting to mature, who knows? I can't say yes or no right now, but it's certainly something that we have our fingers on the pulse of. So we will be exploring those avenues.
Yep. And guys, I forgot to, oh, I'm sorry.
I was just saying, I think we're caught up on questions, Andy.
Okay, perfect. I did not put that back to real time during market hours, so I'm dropping it in there again. You can change it yourself, but if you want the version that's set for real time, I just dropped it in there again. And I was noticing this Verizon had a nice move today, and kind of possibly huge volume, big option volume, you know, one that could have a little more, you know, steam to it. You can see where it's running into problems right here.
Right.
That's why always looking at dailies. Look at that, to a T there. Always looking at daily charts, guys. And this is why I say you don't go back just a couple of months, you know. Find out where pivot points may be. There's a huge pivot point. So much can be learned by studying daily charts.
Hey, Andy, so we had Scott was asking, you know, what are some of our favorite windows? Do you have that document that you could drop into the chat that has my favorite windows, your favorite windows, and Steve's?
Yeah, I'm not sure. I don't think we can drop a PDF in the chat though, can
Well,
we?
Scott, just pop an email over to info@trade-ideas.com and
Mhm.
reference favorite strategies, and we'll get it over to you.
Yeah, that's something we have to drop in handouts, and it's a little bit too late in the game. It needs to be done before we get
Right.
started.
But we'll get over
But
to
yeah,
you.
he's right. We'll get it to you. Don't worry about it. Just send us a email. All right, guys. Looks like okay. Real quick, somebody wanted to talk about run. Normally our trade of the week is done on Tuesdays. I can give you my perspective. I mean, basically, you have a stock that is holding this breakout. If you look right here, every time it tries to go down and fall down below this breakout level, that's just where the trade was called, I believe. And then we had a gap up on that Monday, Tuesday, Wednesday, Thursday. So that's right. So you'll have to refer back to the article. I'm not sure exactly where the stop is. You know, I know it's much lower than where it is. You know, now you're probably. You know what? I'm not even gonna guess. You'll have to refer to the the handout. Me, you know, I think everything's still just fine. I mean, you think today it would have sold off harder than it did with the market, the midday turmoil that we had. It didn't. It held that level, and it could just be kind of rebuilding, moving sideways, consolidating, and then ready for potentially another move out of this area. But refer to the handout, refer to the email that you got for the stop. All right, Scott. I will bring Scott back in, guys. He will march us out of here. Hang on, we do have an incredible sale going on. So, Scotty, are you? Where's my
Yeah,
dad? There
thank
we
you.
go.
Can
Okay.
return to the slideshow, I think. Yeah, tomorrow we
That way.
have a new podcast episode coming out, so make sure that you're subscribed so that you can get that when it's fresh off the presses. It should come out about an hour or two after close. Just search for Trade Ideas Podcast in the app that you use to listen to podcasts and add us. You can also listen to some of the previous episodes. They're all there archived for you. We have a code that's good for the remainder of this month. SUNNY, all caps, saves 15% off your first month or a year. You can also download a handout with a lot of this information. If you just go to the handouts panel on your GoToWebinar interface, expand it. There's a blue link in there for a PDF that has some of these slides, including the contact information for everyone here. So use that code, saves 15% off your first month or year of standard or premium. Either one comes with a full hour of one-on-one training with Andy or Jamie or Steve. So after you become a subscriber and check out the trading room and get a little time in with the software and watching some videos, then schedule your training session by going to support, clicking on training, and using the app there to do that. Thanks everyone. There'll be a recording of this up tonight at some point, and you get an email reminder about where the webinars are on the playlist on our YouTube channel. Email any questions to info@trade-ideas.com. That's the best place to send those to, or you can reach out to Jamie or Andy directly. Jamie is jhodge at Trade Ideas. Andy is Andy at Trade Ideas. Follow Jamie on Twitter at QuantBot. Steve Gomez at Today Trader. Find us on Facebook. Trade Ideas Pro is the handle on Facebook, and like our page so you can share everything we post with your friends. Thanks, guys. Have a good one.
All right. Thank you, Scott. Thanks, everybody.
Yep.
Thanks, everybody. Bye-bye.
Bye-bye.